So this is the IRA for the self-employed mistake that nobody is talking about. I don't know why, but they're not talking about it. So if you want to save more for your retirement, you want to reduce your federal income tax, possibly save more into a Roth side of your accounts, procrastinate or not procrastinate, and you want to lower your self-employment tax, this video is for you. So what's going on, guys? Welcome back to the channel. If this is your first time at our channel, welcome to the channel. My name is Travis Sickle. So in this video, I want to show you how you can avoid the mistake for the self-employed. Make sure you're maximizing your retirement. So what am I talking about? Hey guys, I just wanted to interrupt this video for just a second to thank our sponsors of this video, the Hatch Card. Now, if you're not familiar with the Hatch Card, it is a small business checking account. You can sign up for it online. Now, it's really important as a self-employed small business owner that you get laser focused on your business and get organized to make sure that you're separating your personal life from your business life. But most importantly, with the Hatch Card, they don't have any minimums. And the reason that's so beneficial is that when you're starting out, you're just trying to focus on running your business. And if you have a low balance at any one point, you usually will have additional fees, but that's not the case with the Hatch Card. So I'm going to leave a link in the description at the bottom. I've also done a full video on the Hatch Card, so go ahead and check that out as well. I'll leave a link in the description at the bottom. And thank you to the Hatch Card for sponsoring this video. I am talking about the SEP IRA versus the solo 401k. Now, it's not just about retirement savings. It's also about reducing your self-employment tax. So the way I'm going to frame it up today is so you can understand how you should actually run your business in addition to saving for retirement. So even if you don't want to save for retirement or not yet, you're not ready yet, you're still going to walk away from this understanding on how to control and reduce your self-employment taxes. So here's the deal. The Secure Act of 2019 changed everything, but it didn't go into effect really until this year. There's 2020 taxes, but we're already in 2021. So it was your 2020 taxes was really the first time that you can do this. Why do small business owners, the number one reason, in my opinion, why do small business owners use the SEP IRA? It's because they procrastinate and they do their taxes with extensions, and then they want to save money in retirement, or they get lump sums. So maybe you're not a procrastinator, right? I'm a procrastinator. I do everything else. I run the business. I do everything else first, and then I take care of my own stuff basically last. So in that case, you need some place to save for retirement if you're not doing it systematically. You're a small business owner, you have lumpy profits, you don't know what you're gonna earn, you wait until the end of the year, and then you wanna do a big dump into the retirement plans, and you're kind of limited if you don't have one set up. Now, even if you have a SEP IRA, you can still do the conversion, and really, I can't think of very many instances, if really any, we'll think about them as we move forward in the video, why you should have a SEP at all anymore. Because you can just roll it into an IRA and say, see you later, and not have to deal with it. You probably want to make sure that you can still save as much as possible. So the solo 401k, right now, you can open and fund the solo 401k all up until including extensions, just like the SEP IRA. So that was a huge reason to use the SEP IRA in years past, but that's no longer a reason to use it. Number two was the cost. 401ks and solo 401ks were generally, and sometimes still are, a little bit more expensive, but I'll tell you this, you can absolutely find a place to open them up that's completely free to open it up, and it will be the exact same cost as the SEP. Now, it's not going to be like that every single place, so you have to go in and figure that out. So you might go to one place or one broker dealer, one financial institution, whatever, and they might say, oh yeah, if you want to open up a solo 401k, it's going to be $500, $1,000, and the SEP is free or whatever, vice versa. It doesn't matter. You can find a place that's completely free and exactly the same cost for both of these plans. So do your due diligence. So really those two factors are eliminated. They're no longer a reason why you should use the SEP. The other reason the SEP is used is because you're a sole business owner. You don't have any employees. Well, even with the solo 401k, you really don't want to have employees, but you still can with both plans in the qualifications for employees or part-time employees. In certain instances with their age, if they're under the age of 21, then it doesn't matter. They can't participate in your retirement plan. But in either case, if you have full-time employees, the SEP is the only plan that you can also contribute into the employee's retirement. But here's what I would say to that. There, you can use a traditional 401k, and it still would be, in my opinion, more cost-effective to do it. The reason is because with the SEP, you need to fund the same at the same percentage level you do for yourself as you do for your employees. So if you're giving yourself 20 or 25%, depending on your tax filing status, how you're doing the calculation, to put it into your plan, you're going to do that same percentage for every employee who qualifies for the retirement plan. So that's a lot. That could potentially be a lot of money. Now, not the same dollar amount, just the same percentage. So whatever that multiplier that you're using. The solo 401k, you just flat out can't. You can't have employees, or you can't use the solo 401k. But in that case, then flip to a regular 401k, and 9 times out of 10, it's going to be a better setup anyways. You can also look at a MEP. And if you want to know more about that, let me know in the comments down below. But right off the bat, that's how you can do it. So if you want to save more into your retirement plan, the solo 401k is the way to go. And here's why. Both calculations for both plans work exactly the same as far as making those contributions. If you're an S-Corp filing an S-Corp, it's just 25% of your compensation. You make $100,000, you can put in $25,000. If you are a Schedule C filer, so you have a net profit, it's 1/2 of your self-employment minus your net profit, or your net profit minus 1/2 of your self-employment. You have that number, and then you can multiply that number by 20%. So in the same scenario, if you're earning $100,000, the math wouldn't be $20,000. It would get adjusted because of 1/2 of your self-employment. Because remember, 1/2 of your self-employment comes from the employer side, and the other half comes from the employee side. So that's where you get the deduction. You get the employer side deduction when you're figuring that out. Anyways, in a nutshell, it's 20%, but it's a reduced amount. So 100 grand is actually 18,587. That's what the math is. So it's a reduced amount. In either case, SEP solo 401k, exactly the same, okay? Where the solo 401k comes ahead is the fact that you can still do that regular contribution that you're probably already aware of, the $19,500 as the employee. You can still put that into the plan in both business entities. It doesn't matter if you're an LLC, Schedule C filer, or an S-Corp filer. It doesn't matter. You can still do the $19,500. So the solo 401k, you can get more into there. What's the other benefit? Is it's going to help increase, possibly, if you put it into the traditional side, your federal income taxes. So you can put in more, okay? So you can get more money into your retirement plan, reduce your taxes further, or number 3 I had on that list that I was talking about the benefits of using the solo 401k is the Roth. You can have a solo Roth 401k. So on that side, you can put in the full $19,500 as the employee right into the Roth side of that plan. All the other money can be converted over. Now remember, if you're doing it with extensions, when you're doing a conversion, that is in the year you do the conversion. So you can technically make a contribution for the previous taxable year if you're doing it before the tax filing deadline, including extensions. But the conversion will be in the year that you make that conversion. So just be aware of that if you're trying to get as much money into the Roth side of things. And then the 4th bullet I talked about was procrastination or not procrastinating. In either case, if you're waiting to open up this plan, the SEP, you used to be able to open it up at the last second. You still can open it up at the last second. Same thing with the solo 401k. So it's a non-issue. And if you're ahead of the game, you want to open up in this taxable year, so we're in 2021 right now, you want to open and fund it for 2021 with $21, you can do that too. So if you want to be ahead of the curve and not procrastinate, you have that option. And then you want to lower your self-employment tax. So here's an interesting way that these two plans kind of diverge again. The calculation is done with compensation to you. So as a Schedule C filer, it's all the same. But if you flip over to the S corporation, you have your W-2 wages and you have distributions. Well, if you're trying to get more into your retirement plan, trying to base that 25% on a larger number, that means you're going to have more self-employment tax on that larger number. Well, with the 19.5, that means you can just put in the 19.5. So at the same dollar level, you can actually get more funding in there. Let's look at a calculator, an online calculator that is basically the same calculator used everywhere, and it will do this math really, really quickly. So let's go ahead and take a look at that together and just kind of walk through it. So, okay, here's the conversion chart, but let me go to the contribution calculator. So for a C Corp, it's going to be 25%. So let's say we make $100,000 and we click calculate. And what we're going to do is look right here. We can see the maximum profit sharing is 25%. So it's $25,000. That is for the solo 401k. In addition to the 19.5, bringing it to $44,500, whereas the SEP can only go to $25,000. Now there are kind of break evens here. So if we go to, I think I worked out as $232,000. So let's put in $230,000. And we can just see the difference here. We can still see that $58,000, which is the maximum contribution into any retirement plan from the employer and employee side that you can put into these types of plans, not including cash balance plans. But $58,000, and then for the SEP, it's only $57,500, but you bring up to $232,000. I believe that is the max contribution that you can put in, where they're both $58,000. But remember, go back, and because you can still get in that $58,000. I believe the maximum was, let's see, $154,000, I think it was. I could be wrong on that. $154,000. Not $1.4 million. That would be a lot more. $154,000, calculate, and we got the $58,000. So look at that. So in the one instance, in order to maximize the SEP in 2021, you're going to have to do $232,000 as far as income goes. But the solo 401k, you can get it up to $58,000 if you're just earning $154,000. So relatively significantly less in order to get the same amount in the plan. And that's one of the reasons why I like the solo 401k. And you can get the full, like let's say we only make $25,000. Maybe you have a side hustle, right? Calculate. And look at that. We can put the full amount in there, $25,000, but the SEP gets capped at $6,250. And it will go down if we flip it to the Schedule C filer, which is a sole proprietor. So we see that at $25,000, you can only go to $23,234. So we get that $19,500 in there, but we can get an additional profit sharing contribution of $4,647. So quite a big difference here is using one plan versus the other. And one last note about this is that with the Roth side, or even the solo 401k in and of itself, if you have side hustle money, if you're a self-employed small business owner, maybe you have a side hustle and you're only earning a little bit of money relative to everything else that you earn, you can still open up one of these plans. Now it'll have to aggregate if you have a retirement plan at work with the same math. The max is $19,500 as an employee side contribution combined across all plans together. And all of these plans will have the catch-up contribution too. So we didn't even put that in there in the calculator. We could have put 50 and older for an additional $6,500 into these plans. But that was just for under the age of 50. So that's an additional $6,500 for these retirement plans. But the solo 401k, I cannot think of a reason why you would keep the SEP. If you had somebody who is a family member, but not your spouse, and you wanted to give them the exact same amount, that would basically be the only thing that I can think of is a rational reason of why you would want to keep the SEP IRA with employees. Because with the solo 401k, you can do your spouse too. So all these numbers apply to you and your spouse, not combined. So there's a ton of things you can do. But if you caught that one, the last point I talked about, even if you want to save into a retirement plan, it's the self-employment tax. And that is the difference between the W-2 wages and your distributions. The distributions don't have the self-employment tax. So even if you don't have a retirement plan or don't want one or don't, whatever, you could still separate those two and start paying yourself as a W-2 employee of your own company, S corporation. So if you're doing that, then you're gonna help reduce your self-employment tax. So another strategy you can help improve your financial situation by putting more money back in your pocket. So if you have any questions on this stuff, let me know in the comments down below. If you've enjoyed the video, let me know in the comments down below. And thanks for watching, and we'll see you on the next one.